I go live on Facebook. It'll be just 1 second here. Hope you're doing well. Hope you're having a great weekend so far. And I think we're live on Facebook. Hi everybody. Welcome to our weekly edition of the Strategic Swing Trader. I'm Sami Abusad, Director of Education at T3 Live. Hope you're doing well. Hope you're having a great weekend so far. We're going to do what we always do, which is go over the market, go over some swing ideas for next week, and have a discussion together. So let's do that. Before I start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. Be sure to please check out the links in the description if you're interested in my services and what I offer here at T3. And if you find benefit in today's video, be sure to hit the like button. I'd appreciate that a lot. Without further ado, let's go ahead and get started. So what I do in this video, weekly video, is I go over the market and then I share with you my watch list, my daily watch list for Monday, actually. Only for Monday, my bullish watch list, swing watch list, my bearish watch list. And then every day I update the watch list, but I don't do a video every single day giving you the, I do that for the strategic swing trader members. I give them my watch list every day and the plays that I end up taking, of course. By the way, if you're in the strategic swing trader, if you're a subscriber, feel free to log on to your account. I've already published the plays that I will be taking tomorrow. So feel free to take a look at those and see if you want to participate, play along with me, okay? So first, the market. We have a pullback in the market so far, and it could be the top. This could be the short-term top at least, or a long-term top. I am as unsure about it as I've ever been. Can you believe it? Even though I'm actually short the market, it's still a really tough call because I don't want to get into it because this is a long discussion, but I'll just go over, this is the daily chart of the Qs, which is the tracking ETF for the NASDAQ 100. Here's the weekly. Look how bullish this weekly chart, this run-up has been. Are we really going to come in much? I don't know. I don't think so. SPY, okay, not as bullish, but still we had a 60% retracement. At least the Qs had a 75% retracement of the drop. Usually, if a stock or the market recovers more than 60%, don't expect much of a pullback. If a stock or the market recovers more than 60% of that drop, don't expect much of a sell-off. But there's a case to be made for not the Qs so much, but something like the SPY into the declining 20 has plenty of room to fall, at least to here, to the 200 MA on the weekly chart. The IWM is even weaker. Look at this IWM, much weaker. So there's a case to be made for a sell-off here in the market, but it's not an easy call for me because of the daily chart, because of the uptrend on the daily chart. You see that even on the Russell 2000, right? The IWM, right? We have a rising 20, we have support, we already kind of reached it. The SPY, do we have one more day down? Maybe, right? We'll see what the futures do tonight. Does the Qs get to the 200 MA, right around $200 also, or does it stop at the rising 20 MA? It's a tough call. Usually, if you get two red bars in a row, that signals a real reversal, right? In a bearish market, you don't get two green bars in a row. I mean, you can go back and take a look. We only got two green bars in a row only once, which was here at the start of the pullback. Okay, and then from there, we didn't get two green bars in a row. You might say, well, here we got two green bars in a row right here. I just mean two up days in a row. Like this day was a down day. So even though it was a green bar, it doesn't count. So you don't usually get two red bars in a row in a bullish market. You don't get two green bars in a row in a bearish market. You might say, well, what about here? We got three red bars in a row. Well, those are narrow range bars. I mean solid red bars. So we have one now. I know we had another one on Thursday, but that doesn't count. That's a doji bar. That's a neutral bar. So do we get one more on tomorrow on Monday? Perhaps. I hope so, because I'm actually short the market. And where is it? Here it is. SPXU is the inverse ETF for the spiders, and then the TZA is the inverse leveraged ETF for the Russell 2000. I got the market at the top. Those that are in the room with me know that I did at the top. I also have USO at the from the bottom. My average is here's the no, that doesn't show the average. My average is like, oh, average price, here it is. It's 18.15 is my average price, and I also have W, and I have other positions that are all in the money. I have W short, but the point is, I really truly got the market right at the top. I also got Tesla right at the top, and I covered it yesterday towards the close. Got right to the as soon as it gapped. In fact, before the Tesla gapped, before the market opened, I sent an order to short it, and I went over it in the room in the pre-market. I shorted Tesla. I bought TZA in the I didn't buy it in the pre-market. I just submitted the order in the pre-market so that it filled right at the open. Why? Because look at this. Down, 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 and then the biggest volume bar we've ever seen on the chart. That's a climactic buy. So, and I'm already was thinking the market may be topping out because I saw Tesla gapping up. I mean, come on, that's a little unreasonable. It went from 350 and then up, and then gaps up to 870 to the all-time, almost to the all-time high, into that major resistance. I felt that's a little unreasonable. Facebook, I also shorted at the open, but I covered it already. It didn't really drop that much. I sent an order to short Facebook, to short Tesla, and to buy or short the market by buying the TZA and the SPXU. So I sent all of these orders in the pre-market. I went over them in the room live, and then they filled at the open. So I really got in at the top. Tesla, luckily, it got already to the target, and I feel Tesla could actually drop to the $600. Honestly, I feel it could drop to $600, but I covered it because I had a huge drop. Look at this, almost a $200 drop, $170 drop, right? Almost $200 actually, dollar drop in 2 days, right to support, right to the rising 20. So that's why I covered it. But could it actually continue a little lower? Sure, it could. And the market, I came very close to covering half. The Spider, the SPY or the SPXU, and the TZA, which is the IWM, because we almost got to the rising 20. That's usually target, at least a target for me. Tesla already got there. Facebook showed a lot of relative strength. That's why I decided to let it go. So I'm not really sure about the market. It's not an easy call. If you think, look, let me just tell you something. Some of you think, oh, this was the biggest sucker rally in history, meaning the market is going to fall all the way back down. If you think so, and you participated in those calls with me, then no reason, I don't see a reason to cover. If you think this is just this is the top, we got the top, and this is the beginning of a sell-off, big sell-off, then there was no reason to cover. I, on the other hand, think otherwise. I think this bullish rally is going to hold. I don't think we're going to go back down all the way down, and I don't even think we're going to go back down that much. So that's why it's a much more difficult decision for me whether to get out or not. I decided not to get out on Friday, but my plan is if we get another drop on Monday, tomorrow, that I will get out of half, at least half, and then let the back half play out. It goes back up and stops me out or trails out, no problem. It crashes and continues lower, then great, I caught the top. So that's my goal, is to basically cover half and then keep half. But if you think and really believe that this was the top in the market and you got in at the top, then I don't see a reason to cover. Does that make sense? So this is the beautiful thing about trading, is there's a million ways to make money. It all depends on what you think, how you approach it, and whether you're right or wrong. There are no absolutes. There's a million ways to skin a cat, as they say, right? The same in trading. It's just how you see things that determines, and whether the market agrees with how you see it, determines your profitability. as a trader. So for me, I don't see the market dropping all the way back down, not even a significant sell-off. I shorted it as a counter trend move because I felt with Tesla gapping so much, with Facebook gapping so much, and we very much still have the problems that we still have with the economy, right? That it was a bit getting, irrationally exuberant. It was getting a little out of control. So I decided to go short. I almost never, ever, truly, I don't remember ever sending market orders to short at the open before the stock and the market in this case opened. I never ever do that. I always wait for an intraday pattern at the open, but I was so sure that the Tesla was going to get sold at the open, and I was sure about the market, the Facebook, that I decided to send orders right at the open. I mean, before the open, and they got filled at the open, because I knew that if I tried to catch them at the open, I wouldn't be able to catch all of them. And then there were also gap trades that I wanted to do, but I never send orders in the pre-market to fill at the open, like I did on Thursday. But at any rate, it worked out. Now the tricky part is how to manage them. Tesla got to target, crashed, but the market is not an easy call for me. If it's an easy call for you, then follow your conviction. Everybody has to follow what they think is true, right? All right. So with that said, let's take a look at the rest of the market. I'm not going to go over USO right now because it's on the list as a swing trade. As I showed you, I'm already in USO from 1815, I guess. Is that right? I'll just double check. My average is on USO. I have 1,000 shares from 18.1475. So from 1815 is my average price on USO. But it looks interesting as a long. Some people think, oh, USO, the oil crash is temporary. This is definitely, let's go ahead and invest in it long term. You have a point, right? You have a point. I mean, this is like a 90% drop, right, that we've gotten in USO. But the thing is, I don't think the USO is going to be an easy trade like a lot of people think. I think, if we get to $25, I'm getting out. I think if we can get up here, that would be marvelous. Now, I only have 1,000 shares, which is a decent size, but not, and I'm trailing it to 1787, so my risk is only like less than $300, basically, my risk. So I'm going to look to add to it over 1930 tomorrow. If it takes out 1930, I'm going to look to add to the position. But I don't think this is like what most people think, that, it's this crash in oil is temporary and we're going to go right back up. No, sir. Or ma'am, as the case may be. I think we're going to go back up a little bit, sure. But I think it's going to take a long time before oil can move way back up. So, and mostly I'm a short-term trader. I don't, keep positions for that long. So I'll be taking some if we can get a pop here in USO. In fact, I could take some at $23. The high of this bar, see it? The doji bar's high is $23, and then back half maybe we get to the declining 20 on the daily chart. At the moment it's around $30, but by the time the USO catches up, I'm thinking it'll be about $25. So that's what I'm thinking for USO. All right, that's my personal opinion. Again, some of you out there are long-term investors. Feel free to act on your conviction. If you're wrong, you'll learn from it. If you're right, then you'll make the big money. So always try to act on your conviction, because nothing else will pay you. It's your own conviction, your own system that really, it's your own inner intellect that puts you at the gate to profitability. No one else, truly. Now, you do need to learn a methodology that has an edge, that routinely and consistently makes money. But it's your own conviction and intellect that puts you right at the gate to profitability. Truly, truly. Okay? And not anyone else. Not me, not anybody else. Some swing ideas for next week. ARNC. Now, I don't have a good daily list. I'm telling you from now. Just FYI, a lot of these ideas, like for tomorrow, I'm only playing 2. Some people, might go over the list and think I'm gonna play every one of them. No, I'm only playing 2. I picked what I consider to be the best 2 ideas, and some of them might be good, but they might not trigger. Or like the case on the OSW, I was gonna play it, but it gapped just above my entry by 2 cents, so I didn't get filled. So sometimes they gap a little bit, and you don't get filled. So just keep that in mind. On the ARNC, I like it higher over the base. Stop under the base. Got it? As a transition A on the daily chart. The transition A play, that curling 20 MA on the daily chart, has made so much money recently. It's incredible. It's like the OSW, see that? But I got skipped on it. GCI, the transition A, PBF. See that? I mean, you name it. Sage, right? Look at Sage. It went from $26 to 40 to 42. From 26, 27, I think, 29 to 40. I just, so many of them. I played the ENBL, right? Look at the MTDR, the transition A. Look at KRA, transition A. Look at MRO, that curling 20 MA. See that? So many of them. I can't tell you how many. But that strategy is almost over for now. That pattern is almost over. Because the market just reversed for the first time, and a lot of stocks, and it pulled all the stocks down with it. So there are a few that are still setting up, but it's not as easy now as it has been the last few weeks. So you have to be picky, and that's why I'm only taking 2 plays tomorrow. So ARNC, over the base, stop under the base. Again, if you're a subscriber to my newsletter, you feel free to log on to your account, and you'll see which 2 I'm going to be playing tomorrow. ATHX, also another hourly base breakout. Over the base, stop under it. Possible double bottom on the daily chart, basically, or a W pattern. So that's what's going on with the ATHX. The GCI, now GCI triggered already on Thursday, but does it have another entry here? Another like 1, 2, 3? Perhaps, not too bad. Over the base, stop under the base. Okay. PAGS is an hourly base breakout. I like the relative strength on PAGS. Long over the base, stop under it. But what I don't like about it is that it's not at the 20. It's far from the 20 on the daily chart. Notice I primarily use the daily and the hourly charts for swing trading. Primarily. QFIN is a transition A on the daily. Weekly, right? I think is also a transition A. That's not bad. Monthly, not a transition A, but daily and weekly. Hourly is a base breakout, so it looks good. It just has a big stop. Entry over the base, right here. Stop would have to be under the pivot. So it has a large stop. I like to pick things that have a smaller stop. And then TORC gapped up on like Wednesday or so. So Friday, Thursday, yeah, on Wednesday, and now has a breakout. Also transition A play. Transition A breakout. So long over 60 or so, $1.60 stop under the lows. See that base breakout? So it's a long-term base breakout. I like it, not bad at all. And then last but not least is the USO is a breakout on the hourly chart, counter trend move on the daily. Not an easy call, but if this is the bottom on USO, of course it would have been better if you got in it on Thursday when I did. But because now I have no risk almost. I can trail it under 1840 and still make a little bit of money if it takes out 1840. But I'm actually looking to add to it if it takes out 1930. In terms of the short plays, we got the following. We have CNXM as a short. It looks very good with one issue, which is the large stop. Stop is right up here. Entry right here. Target would be the prior low. It's very clear. But you see the stop is pretty large. Again, I like tight stops because if you catch a stock with a tight stop, then it doesn't have to fall apart before you can make really decent money. A con is a transition C. This is called a transition C breakdown. On the hourly chart, stop over the base, and target would be right here, like 460 maybe. So it looks okay. It's a counter trend trade on the daily, and it's a breakdown on the hourly chart. CPA looks okay on the weekly, I guess. It's a weekly sell setup, but it's a large stop. That's the issue with most of the shorts. Entry would be under the base, stop above it, so it's a large stop. Next is eyes. I don't know what's going on with the eyes. Look at this. Big breakdown bar and then a very, very narrow range bar. So that leads to the 1, 2, 3 continuation pattern. If it takes out $1.10, $1.11, stop would be over 125. So short would be under the base, stop above the base. Very, very tight stop. But I don't know what's going on with this stock. I don't remember ever trading it, maybe in the past. And target the prior pivot low right here at 71 cents or so. IBKR is very good, but we just need the decline, the 20 MA on the hourly chart to start pointing down. Very, very good short right here. Stop over the pivot, but I'm not going to send an order. In the pre-market, I'm not going to send an order now. I'm going to wait for it to maybe come in base, and if it does, then I wouldn't mind playing it with a declining 20 MA on the hourly chart. The blue line is the 20 MA, the red line is the 200. That's all I use. SHOP, possible climactic short. Look at the larger time frame on SHOP. Incredible, isn't it? Vertical. So I'm not saying the stock is going to crash, but could it come back down to $500, 550 and 500? Sure. So entry would be under 595, stop over 627, 628. Target 1, 550, target 2, maybe $500. Better than SHOP, it would be the W, in my opinion, with a short under this bar's low. Now, I'm a little surprised. I was a little surprised on Friday that W didn't come in more, especially since Amazon came in hard, and they have a similar model, basically. So I like it under this bar's low. Now, I already have, I'm already up $1,000 in it, and I already have 250 shares short. My average is 126.80. I don't know if you can see. You should be able to see this, right? The pop-up window doesn't come up here. Oh, there it is. No, it doesn't come up on the video. So my average is 126.80 for 81 for this stock. So my average is already from up. I'm in it from up here. But does it look good enough to add to it under 119.70? I think so. I think it looks good, and target about $100. W had an amazing move up from $21, look at this, to 135. Oh my God, right? Huge move. Now, when people see this, they think, oh my, it must fall back a lot. It must come all the way back down to maybe 80 or 60 would be reasonable. That, my friends, would be unreasonable. When a stock proves to be really bullish and you play it short, that's okay if it has a setup, which this did. It had a climactic sell setup. But don't expect it to fall apart, because it's told us already that I'm a really strong stock. So don't expect it to fall apart. I was just expecting, to $100. And on Friday, the market dropped 3%. This thing barely dropped 1%. So, that shows you it's really bullish. Now, you might say, well, why did you short it as a really bullish stock? Because it went climactic. What's a climactic sell setup? I did a video on it. Check out my playlist on YouTube. There's a link for it in the description. I always drop a link for my playlist in the description of my videos. There's a video or two, at least two actually, separate videos on how to play the reversal plays. Those stocks that go way up climactic and then, you play them short. Like I did with Tesla. Like I did with Tesla at $901 is where I got it right here also. I covered too soon, of course. I covered on this day. It made $5,000 on just 25 shares. It made $5,300, I think, on just 25 shares from here, 901, down to here. And then I tried to get back in it over here. It gapped under the entry. I tried to get back in it under the doji bar. It gapped under the entry. And then third time I tried to get it under the base. It gapped one more time under the entry, and it gave up on it. And then it fell apart. So I did try to get back in it, but I just I couldn't get filled on it, because the market, remember in March, the market would gap down every day 4 or 5%, and so did Tesla, and Tesla sometimes gap down 20%. So now, there's a video or two in my YouTube playlist that shows you how to play those climactic sell setups, but that doesn't mean I'm expecting the W to come all the way back down to 40, 60, or 80. Just to here would be perfect. Okay? If you think about it, from 126.81 to 100, 126.81, to 100, that's a $27 drop times 250 shares. That would net me $6,700 if it were to come down to $100. If it were to come down to 100, that's $6,700. That would be a nice little trade. All right, I talked too much. I hope you enjoyed today's video. I really hope you enjoyed today's video, and I want to thank you for sticking with me until the end. Again, if you're interested in what I do, if you're a day trader or a swing trader, I have 2 separate services. Feel free to check the links in the description. It only costs $49 to try it for 30 days. And we are in the heart of earnings season, so this is a really good time to actually get started. And if you enjoyed today's video, I would really appreciate it if you hit that like button. It would mean a lot to me. With that said, have a wonderful trading week next week. Have a wonderful rest of the weekend, and I will talk to you soon. Take care, everybody. Ciao.